All right, everyone, welcome back to another episode of Carnivore Trades. I'm going to do a special video here on uranium. Got a few requests for that. Obviously, it's a bit of a hot topic and hot sector right now. So we're going to do a little video on some technicals for everybody. Essentially, so last year, I said that the bear was over, and you can see we're looking at the Sprott Physical Uranium Trust here on the TSX. The American version doesn't have as much data on it, but you can see this long kind of bleed, a bleeding kind of bear market, where it's very demoralizing. And then finally you have this capitulation low here, which obviously coincided with the pandemic, came up and then, had a little retrace here. And then just like everything energy related, as soon as the election took place, it was pretty much just off to the races. So energy really has just been on a tear in general, and obviously with really no end in sight to ESG type movements here, and at least governments trying to make oil obsolete, or at least make it more expensive for us, for whatever reason. There obviously puts, uranium in an attractive place moving forward, possibly even over the next decade. In fact, even Elon Musk, who is a big all energy guy, he even said recently that that nuclear energy was, possibly something that may be essential moving forward. So that is kind of the fundamental case here for uranium. But as far as the technicals are concerned, I get a lot of questions about these. So let's flip over here. I'm going to go over to Thinkorswim. We'll go back to Sprott Physical in a little bit. We're looking at Camco right now. So I've been talking about, uranium pretty much every week, or at least once or twice a month here in the weekend videos that I do. And I've been saying lately that we're kind of into resistance. So you can see this big red bar here, wide range bar here on Camco we're looking at here. And you kind of stair stepped up. I think I can clear up these lines for you. So kind of had this stair step up, and you're going into this red bar, but there's a lot of, and you got to, this base here was heavy resistance. It was very heavy. That's why you had to pull back and pull back and pull back. But this is also very, very heavy. So this is 2011. This is Fukushima. This is that meltdown, right? So for this to get back above that, it's going to take a lot of energy. And you're already kind of overbought a little bit going into this. So I do think uranium in general is going to do backing and filling. If you want to look at the URA, it's the same kind of deal. You went up into this. If let's take a couple lines here. So this is kind of where you were. You broke down, and you're kind of consolidating beneath that. So the positives here are that, at least with the URA, you're consolidating beneath resistance. I like to see that. I like, when I see a chart or a stock do that beneath a resistance area, that tells me it wants to go higher. It's not pulling back sharply and breaking down. It's consolidating. It's building up, it's accumulation. It's building up the shares to push through that. So when I see that, it's a good sign. That said, you look at a daily, and we're kind of overbought here. Now, I believe there is a little bit of contango in the URA, so it may not be the best indicator or asset to use. We could maybe, I think Camco is a little bit better. Probably the Sprott Physical is probably a little bit better as well, but it still gives you a good visual. URNM, same kind of deal here. By the way, a few months ago, I told, not just the members, I told publicly that $60 was the area that you wanted to buy this at. And that has ended up being a nice low here, up to $91. As of today's close, it is Wednesday, April 20th right now. So basically 50% move there, over 50% move off of the lows from that buy area. But again, it's trying to get through this area of resistance here, the double top, pull back. It's overbought right now. Same thing with Denison, a little less overbought on the daily, but this is more of a junior producer, so less money flow right now. But you can see you had this kind of wedge pattern that tried to break out of, couldn't quite do that. And now it's kind of retracing a little bit. But the big picture here for everyone is, and I'm not, without getting too in depth here, it's that, I like the fundamentals for the sector. I love that you put in the capitulation low, and obviously you're taking off to the upside. But this is going to have to do some serious backing and filling. Nothing goes up in a straight line forever. And ultimately, things that go up in a straight line come down typically in a straight line, just like we did in 2011 and obviously 2008. If we flip back over to trading view, you can see Sprott physical, you know, up, straight line, and then down. So that's really my caveat here. And then same thing, obviously, in 2010, 2011 is, you know, obviously we don't want to see this come back down. I'd rather see it consolidate. Now, here's the caveat. And to me, that's really bonds right now. So if we look at, you know, the 10-year, that is really rallying. And, you know, I've said that this is into resistance. I've been saying that the last couple of weeks. Got through that 200-month moving average. I still think it needs to touch 3%. It did manage to get up to 2.97 last night. Did not do that during market hours. But the reason I say this is if bonds reverse and start bidding really hard, and we have a 2008-like scenario like the one I mapped out about a month or two ago in the kind of the long-term gold / oil video. I'm not going to get too much into that right now, but essentially we could be coming into a period where commodities really start to crash, and we have a full-on recession. So if that does happen, it doesn't mean that uranium's, you know, necessarily dead. It just means that it's definitely gonna come in. Now, again, fundamentally, the fundamentals are still good. So if it can hold up and withstand that, it can still move higher over the course of the next decade. Where could it go down to? Well, here's CCJ. So, you know, typically you're gonna look for, usually I look for a 50% or a 618. So somewhere in there, so 16 and 1878 on CCJ. And if you get through that, you know, it's possible if we have a, you know, if we really do have a crash, it's possible you get back to $12. There's a lot of support in that area. If we go, for those of you who follow Sprott, we can just take this fib right in here and we'll do this. So we'll just go right to the low, up to the high. So there's your 50%, 1319, 618, 1150, and then your 75, 970. So, you know, right in this, I would say there's a really good amount of support at 1150. Look at all that. Look at that belly that you got through. Then you got the 618 there. So that would be your look on the downside there. So I'm not telling you to get into uranium, but a lot of people have asked me about it, and I know it's a point of interest. And CCJ, for instance, did get up to that target. I had that inverse head and shoulders that worked out pretty well. If we flip over here, there we go. Yeah, nice little inverse head and shoulder. And it went right up to 29. That was my target, and it kind of exceeded that. But, you know, the point is, again, fundamentals are good, but we really have to watch bonds. And ultimately, I want to see this do more back-end filling on the bigger time frames. I want to see accumulation, and I want to see it hold up if bonds really start to bid. So that's kind of what I'm looking at moving forward here. Again, over a longer period of time, this can, you know, uranium and nuclear energy can really perform well. But in the near term, there are a little bit of headwinds here, and I don't want to see it spike up and then have a crash. So ultimately, I do like the fundamentals, but I'd like to see it consolidate a little bit more on the bigger time frames. Anyways, guys, we're going to wrap it up here. Just want to do a quick update on that for you. You guys have been asking about it. So anyways, you guys take care. Come find me on carnivoretrades.com, and I'll talk to you all next time.